Hello, everybody. Gary Massa here with Massa and Associates here at Compass. And happy Friday, March 27th. And welcome to my State of the Union or State of the Market. Now, the impact of COVID-19 has affected all of us in so many different ways. I truly hope that your family and you are safe and finding positivity in these unprecedented times. Many of us have concerns over various aspects of the financial markets, but what I can speak to professionally is real estate. The real estate markets have proven time and time again to be a key pillar in the economy, and as many Americans, as well as the international investors, have fortunes invested into their homes. And while the practice of real estate as we know it today has not been included in the essentials business category, our industry leaders are working with the state lawmakers to solve this part of the equation as we speak. The ironic part about all of this is that these are uncharted waters. Those who have the insight and the experience will be the first to admit none of us know exactly what to do. I'm proud to report, however, that even in times of crisis, our leaders from all ends of the industry have stepped up to start putting procedures into place and to keep real estate transactions moving forward while keeping people safe. Affiliates like escrow and title have or are in the middle of implementing contactless systems, such as procedures for wire fraud to verify identity and keep wires safe. County recorder offices and title offices are working closely together to make sure virtual recordings are still happening. However, if they do shut down, they're implementing concepts like gap insurance to allow people who are just about to close on their home to take possession and still move into the property and be able to go back and record those later, but still have the insurance on the property in the meantime. Appraisal amendments allowing drive-by and desk appraisals like we were seeing back in 2004 through 2005 and 6. Virtual notary services. Now, this is something that's in the middle of being worked out, not exactly perfect yet, but it is in the works. And the list goes on and on and on. In terms of real estate, some innovative companies and real estate agents have been able to start offering online virtual meetings with the ability to do presentations for buyer consultations and listing consultations. For instance, I'm not really standing in front of Powerhouse Park in Del Mar right now, and this is not a green screen. I'm here at my home office, but it's a much prettier visual to look at than the back wall of my office. However, these are new concepts that we're able to implement to keep the face-to-face interaction and the visual communication that we would maybe miss being on the phone. Fortunately, we have already, Massa and Associates has already had a virtual reality program in place. So we've been still able to accommodate virtual showings and virtual walkthroughs to help the process of getting people's homes sold. Now, no one knows how this will all unfold, but what I can confidently say is that coming out of this time will change many things about the way that we live life and how business is done across many different industries. And I feel very honored to be among the group who is able to adapt, pivot, and deliver ways to serve and bring value to our clients. We personally have already developed systems and procedures to take real estate experience to the next level for everyone involved, to continue to offer an incredible experience for our clients, as well as keeping everyone safe, way more safer than ever before. So when the real estate brokerages activities get back on the clearance list to resume operations, we personally will be able to immediately roll out these plans and procedures to get the market moving for our clients specifically. Now, how is the market moving currently? A lot of questions about how this is impacting it. Now, from where we're standing, there's still a high demand for homes in our area, meaning San Diego coastal communities. Buyer sentiment is protective, meaning that we're seeing concern from buyers in terms of market pricing. Offers are coming in a little bit lower and people being a little bit less quickly to react on making those offers or accepting offers. Now, in North County coastal region, we have seen the following activity in the last 7 days. 182 brand new listings, 85 price reductions, 117 homes have gone under contract or pending in the last 7 days, and 138 have actually closed escrow in the last 7 days. 180 properties, whether they're withdrawn or expired, have actually come off the market. We kind of expect a little bit of that to happen as well while people wait this out. While I don't see any sort of the market crash approaching for the real estate market, I do see a short-term pullback in real estate prices, and this is generally what I'm hearing across the board. As demand slows, as financial markets rebound and correct, and lending gets back on track at all levels, we'll start to see that pick back up again. The segment of the market that I see having the largest impact is that 1.5 to $3 million market, as many portfolio lenders and unique loan programs have either paused, canceled the programs, or flat out declined loans in the middle of the transaction. Until liquidity comes back to the financial markets and the quantitative easing starts to take effect, there's a segment of the buyer pool in this market, the 1.5 to $3 million market, that just vanished. Not because they don't want to buy, but because their loan options just disappeared. Now, the segment under $1 million is still funding loans and remains unchanged from FHA to VA to conventional financing. And the quantitative easing that's coming to our market, this segment of the market will be impacted, or will accept all this first and come back first. That said, layoffs and slowdown in economic revenue may create a slight dip in this market as finances bounce back. The economists that I've been hearing and subscribing to believe this is going to be a short glimpse in our economic history. While Q2 and Q3 may have its challenges in the real estate market, Goldman Sachs believes that GDP for the United States will rebound in Q3 about plus 12% and about plus 10% in Q4. Thank you all for taking the time to listen to my update, and I hope that this information is helpful. I know that we all have questions, and the best thing that we can do right now is to get the real facts and use this time to strategize. If you have questions, please don't hesitate to call me. In all honesty, I might not have the answer, but I am sure that I will get you that answer to make sure you have the right information to make the right decisions. But let's strategize together. Please stay safe and very sane in this time of need. I look forward to seeing you all very soon, and please don't hesitate to give me a call. Have a great day.